All right, guys, Carlton Flowers here, your crypto pro with another short, no frills video analysis of XRP because I wanted to illustrate something here. This is going to be the most simple, straightforward XRP chart you'll ever see me do. Notice there are no fib circles on here, and we're just going to focus on the overall trend lines. And this is the XRP US dollar chart from the Kraken data, which goes back to June of 2017, before the big run up. So let's just look at it here and jump straight into it. We have the big run up that took us to the complete ignoramus price that it ran up here above $3. And of course, I bought it $1.75, and then I cried as it did this zigzag seesawing all the way down to nothing. Then I bought in again at the dumb price. Let's see, where was it? I think I bought right here at 45 cents. I think it was actually on this one right here. This is where I bought at 45 cents, where the majority of my bag is and I'm sitting on. So when we make a trend line from the base, from the previous ascending consolidation base before this run up of stupidity in 2017, we notice that when the thing started to settle down, let's draw. Notice here how we come up off the peak and we go bounce, 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 capitulation. And then each time we touched back down to this baseline, it was creeping up. And then we get to this point right here, and then all of a sudden we set a new trend. The base, which had carried from 2017, was broken at this point right here in May of what? 2019. Now, let's turn drawing mode off and zoom in a little bit, so we can get a better idea of what we're looking at here. Here's that point that we reversed a major trend. May 11th, 2019. Not too long ago. And since then, what have we been seeing? Bouncing around and returning to a descending baseline. Now, notice here that each time the stochastic peaked, it was returning us to a lower price, and that's really just not so hot of indication. Nice volume here, and here's our stochastic peak corresponding with this price. Now this was good because the next peak we had a higher price. See that? And then it goes downhill from there. Here's a peak where we see this price, lower high. The next peak, there's a double here. It's still kind of a lower high. I had my eyes real close on this one, and it was just neck and neck, and I thought this could have been a nice reversal, but it did not close higher than this peak here. Now this one is what fooled us all right here. So we returned back to the baseline here. However, when the stochastic peaked, we had this nice little green bar. There's our peak. And then we took the big fall on the stochastic, and then we had the big price dump here. Now, this is what's kind of not looking so hot, guys. What's the stochastic doing here? Look at this thing coming up like that. And of course, if we just kind of sketch it on, we're probably looking at a peak happening somewhere here. And then, of course, you know, it could double hump, but it's going to go back down, something like that. And so price-wise, we are probably going to creep up. We could hit a quarter. And then guess what? When that stochastic reverses, because we're still messing with this trend and bouncing down to this baseline, we could be jumping down to 10 cents or eventually, you know, worse than that. So we will just have to see. But I don't think the bear market is over. The trend is not over, and we don't know what's going to happen here. Let's turn drawing mode off and zoom out a little bit so I can make a parallel trading channel for you. Okay, let's scrunch this down. So in other words, we've got a channel that's happening here. Let's make this kind of blue or red. So here's the channel, connecting those peaks. This is kind of what we're looking at. And until we break out of this channel, we can't really say that the market has reversed. So we just need to be aware of the fact that we might have some opportunity for really loading up. And in really bad, worst case scenario, if we jump up to the top of this and, hit around the 30 cents, 25 cents, we could dive back down, and it's any man's ball game from there. I mean, 6 to 8 cents is a possibility, so just keep that in mind. That's all I wanted to show, just a possibility there. As always, this is not trading advice. Don't make decisions based on what I show you here. This is just for entertainment purposes only. I am a chartist, not a financial advisor, but here to keep people realistic and not to do stupid things. So if you have not seen the previous video on BTC, please watch it so you can see my comments about these crypto prices in terms of USD, considering that the Feds just pumped $6 trillion into the economy, $2 trillion of which could affect the crypto market. So please watch that video and keep that in mind, because the same things I say on that BTC video could affect us here, where depending on how much is invested into XRP from bailout money, it could really mess up this price line. And the value of the dollar could mess up our framing here. Our framing here could be destroyed, where 10 cents could become 20 cents, 25 cents could become 50 cents. It depends on how much that the dollar devalues as inflation kicks in, since we have all this new money that's been pumped into the economy. All right, that's all. Carlton Flowers here, your crypto pro. I'll hit y'all up next time. See ya.